Welcome back. This is Newsfile, and here on Newsfile, we put Ghana first. So we just dealt with the issues of cocoa board, cocoa pricing, and all of that. But some few messages, and then we move on to the other issues. This one from Abuaje Buampong, watching us in Takrady, says, Obi, the whole structure of cocoa board is the problem. Appointment based on patronage, not merit. Key leadership positions within cocoa board are often filled as political rewards rather than based on technical expertise in agri, finance, or supply chain management. This leads to a lack of strategic vision and operational competence. That's from Abuaje Buampo. Abuaje, thank you. This one says, Obi, my granny who passed on about 3 years ago at age 115, was able to organize herself to farm acres of land while carrying others cocoa as labor to make more money at her young age to ensure her children are well educated. Through that, she was able to send her children to the University of Ghana in the 80s, as well as sponsoring some to the UK for a better life while she made a better living here. Yes. Now, through her hard work, myself and numerous children are now graduates and living our lives. But the sad point is that the whole village which she stayed to do all these is now turning into a Galamsey town in the Echima Impunua district of the Ashanti region, because farmers are not making much compared to their work input. They prefer to give their land for illegal mining. None of her children or grandchildren, including myself, benefited from cocoa scholarship either. In fact, it has been years of neglect, and politicians must apologize to the cocoa farmers and stop politicizing this cocoa matter. It doesn't make the sector attractive anymore. Obi, a little perspective on the cocoa producer price. Is the current NDC position not inimical to the farmers? One, interbank rate is not the real rate the farmers have to deal with, as they cannot get it from the banks and therefore have to go to the black market, making them worse off in input acquisitions. Two, prices are going up regardless of the exchange rate, and so pegging the price to the exchange rate does not improve their lot, as they have to go to the market. As they have to go to the market to buy with calibrated rates against real prices of goods and services. And listening to the farmer, how do you compete for labor with the alternative of Galamsey, where they get higher real wages per their effort? Steve here in Accra with this one. Quite a number of your messages, but this one says, cocoa board is of little use in its current form, Obi. With my grandfather and uncles as cocoa farmers, couldn't access cocoa scholarship for my secondary school education. Yet my schoolmates from Tafo and Bumso, whose parents and grandparents had no trace to cocoa farming, came to school with cocoa scholarship. It's a rip-off to farmers, simple and short. This one says, Obi, fantastic show. Our farmers are burdened with heavy taxes, unbelievable cement and building material costs, and cannot even afford basic tools like cutlasses and input. Is this not clear deception? Our farmers deserve truth, fairness, and dignity, but not excuses. Gusty man all the way from Brekum. So let me pause and let's move on to the next issue because of time. The Bank of Ghana came out with a statement this week, and I'll read for those who may not have heard. It says foreign currency cash payments to large corporates. The Bank of Ghana has observed with concern the growing practice of foreign currency cash withdrawals by large corporates. Example, bulk oil distribution companies, mining companies, and other similar actors that are not directly funded by prior foreign currency cash deposits. This practice exerts avoidable pressure on the foreign exchange market and undermines efforts to ensure stability. Accordingly, with immediate effect, all banks are directed to discontinue the payment of foreign currency to large corporates unless such transactions are fully supported by equivalent foreign currency cash deposits lodged by the same institution. banks must retain proper documentation to confirm the source of funds for every payout. The Bank of Ghana remains committed to supporting the operations of large corporates, recognizing their critical role in sustaining petroleum supply, mineral export, and other essential sectors of Ghana's economy. To this end, the bank, in partnership with the government, has put in place mechanisms to supply and provide foreign exchange liquidity to meet legitimate import obligations of large corporates. These measures are designed to safeguard market stability while ensuring that vital supply chains remain uninterrupted. We expect all banks to comply strictly with this directive and to cooperate fully with the Bank of Ghana in ensuring that available foreign exchange resources are applied efficiently and transparently. Non-compliance will attract appropriate regulatory sanctions. Relevant industry associations are kindly requested to bring this notice to the attention of their members and ensure their adherence. This is signed by Amy V. Kwashi for the Secretary to the Board. So that's the statement from the Bank of Ghana. Prof, I'll start this with you. What's your understanding of what the BOG wants to do with this?
Good.
I'm yet to understand it.
You need the professor to explain.
Forgive me, and Ghanaians should forgive me. I'm yet to fully understand all of this. From March thereabouts, yes, when we saw this aggressive strengthening of the currency, we felt that we needed to stabilize much early and conserve FX for stability. Because the economy's own FX absorption was low at that time. And therefore, with time, demand will pick up.
Yes.
When demand picks up, in response to government's own economic reform, we are talking about business inputs that are largely imported, denominated in foreign currency. There will be pressure. And we only have a limited amount of FX and all of that. So to a large extent, yes, we are not saying Bank of Ghana should not intervene in the market. Is that okay? Yeah. If the volatility is just too wide and all, but the excessive intervention may create an exchange rate that will not crowd in FX, but it would rather crowd out the FX from the former system.
Yeah, crowd out.
This was it. So I believe that we are at the point where we have an exchange rate that perhaps the market does not think that is a true reflection of what it should, and therefore the crowding in is not happening the way it should. How people will respond to some of these things, you may not have control. We had feared that this may impact remittances. And then you can see the data that remittances have dropped by almost 50%. It's not just that the FX that has gone down. What it means is that projects probably are going to be put on pause and all of that. And remittances support the critical sector of this economy. Yeah. I mean, the real sector, whether some are into farming, all kinds of things and all of that. So really, Bank of Ghana, I think they should take another look at this. At this directive. This directive. If my memory serves me right, 2013, 2014, we had a similar challenge. There was even a decision where...
cap on how much you can get from
and even your foreign FX will be converted and all of that. Look, we've gone through a lot of this and all of that. And I think that ultimately it didn't serve us well. This country, we are too fixated on exchange rates. Too much. Our economy is too much dependent on exchange rate rather than the fundamentals of the economy, rather than the real sector of the economy. And I think that is problematic. Look, exchange rate is not to be pursued as an end in itself. It's a means to an end.
A means to an end.
Okay, so it's all about what economy do we want? And how do we position the exchange rate to a large extent? And that is why no country is really practicing free market system in this area. Okay, so central banks intervene and all of that, okay, and manage it to some extent. So I think the problem has to do with what we are going through has more to do with the aggressive strengthening of the currency. I hope you understand that. And the fact that it's not driven, and we have said this before, that the fundamentals of the economy hasn't transformed. We haven't seen structural transformation or productivity transformation. In as much as I commend Bank of Ghana and also Ministry of Finance in terms of how they have coordinated this from the fiscal discipline and the prudent, I mean, I commend them for that. But I think that, yes, at some point, you want to ask yourself whether this is serving the economy the way we want it and all of that. And what should we do in terms of the exchange rate to crowd in FX? Yeah. If we are not careful.
But Prof, when you listen to the BOG governor, when he met CEOs of banks in Accra, so he makes the point that we will no longer allow hidden practices in the remittance and FX space that distort market signals, erode trust, and undermine the cedi. The stability we fought to restore will not be sacrificed on the altar of non-compliance. So you get the feeling that this statement is bigger, is part of a bigger plan to deal with the volatilities in the sector.
Precisely. I don't have a problem. I remember that the more Bank of Ghana wants to have greater control in all of this, the signal is sent to the market.
Is that it artificial?
May not. Look, remember, you are not managing the economy for yourself alone. There are multiple stakeholders and all of that, and they are all looking at the interpretation and how they will react and all of that. Right now, if you look at the divergence between the interbank rate at the retail level, the Forex Bureau, and then maybe the black market, you can see some divergence. If people have the impression that the true exchange rate is not the one, it's going to be difficult for them to trade their FX and all of that. So I think we should look at the exchange rate at some point.
But what is wrong with the directive to the banks? What is wrong with it? That they should not pay out huge effects to corporates who have not gotten prior deposits.
Yeah, so where would they go and get the deposit from? Are they doing legitimate business? Do they have documentation to back the demand for the FX and all of that? Remember, Bank of Ghana and the role of reserves is to also backstop transactions. Yes. Is that okay? So that the obligation is not totally on, let's say, the importer or the business to say that I must have the FX at all costs before I can do this import and all of that. And that is why we use our reserves in measuring how competitive we are, credit-worthy in terms of trade. So we have a number of months of import cover. We use that because all of that gives confidence to people we trade with outside in shipping goods to us even before the payment is made. And when for instance, this phone is not manufactured in Ghana. If I buy this phone from a shop in Ghana and I pay for it in cedis, actually payment has not taken place because the manufacturer of this phone doesn't take cedis. Until the dollar equivalent of that cedis I paid is transferred out of this country. That's when payment has taken place. And here Bank of Ghana plays a strong role in all of that. So I think the more we do this, my fear is that things that must be solved by the forces of demand and supply, don't use regulation forcefully.
Okay,
if you use regulations forcefully to solve that which must be resolved by the forces of demand and supply and all of that, which again would impact the exchange rate, then in the medium to the long term, you are creating a bigger problem for the economy and all of that.
And I was looking at again the conversation between the BOG governor and the bank CEOs. He makes the point that to enhance oversight, banks and remittance partners must provide weekly inward remittance reports, including transaction level data and FX credit, giving the central bank timely visibility and into remittance flow. So if we all agree that remittance is such a key thing for us as a country, and we've had issue with remittance flow because of the cedi's performance, then the Bank of Ghana should be concerned and should be seen taking some of these initiatives they are taking.
To what effect? To what effect? And please, let's keep harping this point. A strong cedi is better than a weak cedi.
Sure.
We have just been used to the cedi sliding, so everybody has adjusted to that. So immediately, it kind of tries to shift in the opposite direction, strengthening. people have to readjust, and they are complaining or speaking as if a strong cedi is not good. A strong cedi is very good. I commend the bank and the government for strengthening the cedi. What they have to do is stabilize it further.
Yeah.
Okay, remittances will find their level. Now, what the governor is saying is as if to say Bank of Ghana can legislate, they can regulate, they can, by their powers, okay, control the Forex market, generally speaking, and for that matter, its effect on the cedi dollar thing.
Relationship.
Let me make this point. Again, because we don't have too much, we can't explain everything, but here's the point. The laws of economics are laws of nature. Okay? Economics is stronger than law and is stronger than regulation. Demand and supply cannot be legislated. What the governor is saying, and I'm happy you started with the professor, because I was saying to him that after so much analysis, I don't understand what he's trying to say. And if we had time to explain it, you would get what you say about using the mobile phone.
Yeah.
My inputs are in dollars. When I finish, for the sake of investment in this country, for the sake of the fact that people have to bring in their money, etc., we guarantee that they can expatriate, their profits and whatever it is. He collects money in cedis, and it is not against the law for him to try and pay back, where banks have nostro accounts and whatever. The system is set up to do that. Yeah. Now, Bank of Ghana's role is actually to facilitate that, except there is some unlawful business going on, whatever it is. Now you are saying that after I've traded and done whatever I've done with my dollar inputs and everything, collected my money and everything is fine, I cannot, take the money out, or I cannot pay myself in dollars, or I cannot convert the money to dollars.
Is that your understanding of the directive?
I said I don't understand what the bank...
Okay, that's fine.
And I'm saying that if the net effect of it is that, okay, I've collected cedis, I have 100 million cedis, and you are saying that, one, the local bank should not pay me Forex against that. I don't understand how that works. Bottom line, much as I appreciate what is happening, strengthening the cedi, etc., they must be careful not to make it too artificial.
Okay.
We have already gotten warning from other places that, hey, please, loosen your hand on this kind of artificial cedi strengthening. And I think we must be careful about that. I have made the point.
Let me just add quickly before that if in a year, within 5-6 months, your currency has strengthened by about 40% or so, you cannot call that stability.
That's artificial.
It's not stability?
That's more
It's
of a
not
disruption.
Okay.
It is movement in a different direction. Stability is... Look, sorry, finish.
Yeah, so we felt it was too aggressive. The pace had been front-loaded. Yeah. This could have been done maybe over a certain period of time. Then the market would adjust and all of that. So I think that is where... So, yes, as I indicated, I commend Bank of Ghana and the Ministry of Finance, especially with the fiscal discipline, expenditure cut and all of that. But what we have seen here is too aggressive. And look, there are other implications that I didn't talk about. We are encouraging influx of imports and smuggling. Overall, the competitiveness of our domestic private sector may be compromised if we are not careful the way we are going. So, as I indicated, it's about...
But Prof, I think also critically, maybe we have to understand what exactly this directive is about, because I get the sense that we all don't seem to... I just got a message. This one says, Obi, my understanding of the BOG's directive is that people should not withdraw. Not saying don't transfer.
Yes.
Withdraw if you have Forex deposit. So we must be clear. And he says, maybe we all don't understand the directive, so we should probably understand it first.
So
I think that's
I was on the floor.
Yes.
So I said, clarify it.
Okay.
Because clearly, if the professor said he didn't understand, who am I? That is one. So it is the responsibility of the Bank of Ghana to clarify. That is one. Number two, withdrawing dollars in Ghana is unlawful. Sorry, it's not unlawful.
Yeah.
It's improper.
Improper.
Okay. In other places, it is unlawful.
Sure.
So if the BOG says that you shouldn't withdraw dollars across the counter in Ghana, I am totally in agreement with it.
Okay.
What I am saying is, and Prof just said that, you have a situation where we like stability, but it was too quick, too aggressive, and not us. Even other international bodies have said, please, it looks like you are doing something artificial. What we are saying is that those things don't last. And at the end of the day, when you make it too aggressive like that, you end up paying a certain price. Now, the point is this. The economy prefers a stable currency. not a currency that is either appreciating or depreciating too fast.
Okay.
So don't put all this energy in a short-term, quick appreciation that you cannot sustain. That is not good.
So to sustain it, what should they do?
They should effect their monetary and other policies in an even-handed way. And I defer to the prof again. He said, too aggressive. Okay. Me, I'm a poor, simple lawyer. What I can see is that when your hand is on the currency artificially, it will cost you. It is not sustainable. At the end of the day, everybody will lose because the laws of economics, people will simply react. And when they react, I said, those who are old enough, remember the days of import license. This is technically the same. Okay? And if you do that, people will sit down, fold their hands and watch you, and the economy is just going to go down.
Let's probably get an explanation from the finance ministry just to understand what this whole directive is about before I bring in Richard. So, Frederick, what is this thing?
See what he was against the directive.
Thank you. Both Prof and
Kofi
and Mr. Bentel say that the directive is not clear, but trust me, this directive is as clear as crystal. Please. Let me just
when I say I don't understand, I'm looking at the import.
The import.
Ultimately, on where all of this. Yes. So that's what I meant.
Okay.
If you read the Foreign Exchange Act 2006, it is clear that nobody is allowed to trade in or to trade with any other currency. You can't price, you can't receipt, you can't do anything in any other currency apart from the Ghana cedi. So in the first place, withdrawal of USD cash itself is against this act. Now, to explain or to further throw light on, Prof was saying that imports will pick up and then people will need dollar and all those things. There are generally two kinds of forex: the offshore and the onshore. The onshore is the one we are all known to. You have your fiscal dollar, maybe you go and deposit in the bank, or you have a check dollar, you go and deposit in the bank. That is not what we use for international trade. So, to be very clear, you don't need physical dollars. You don't need any form of dollar to engage in international trade. So the penchant, the onshore dollar, the penchant for us to sort of get hold of dollars, get hold of other foreign currencies for international trade is actually born out of our experiences with the cedi. Over the 60 years of the cedi, it hasn't been stable, let's all admit. So people have developed affinity for keeping or storing their money or keeping the value of their money in foreign currency. It has nothing to do with international trade because you don't need fiscal dollars or any form of dollar
to be able to trade.
To be able to trade. All you need is the offshore dollar. And let me come there. You see, the offshore dollar we generate by means of, let's say, exports and official GOG activities. When we export cocoa, we get dollar, which is not fiscal. They credit you mentioned the nostro, and they credit our accounts. When a bank sponsors a client who does exports, the bank receives the exports. Those are all offshore dollars. Those are the dollars we use for international trade.
Yes.
So, going in to a bank to go and withdraw huge sums of dollars is unnecessary. Yes. You don't need any currency to engage in international trade than the Ghana cedi. What you do need is that you build up your Ghana cedi. You send your invoice to the bank that I want to import this from, let's say, China.
Okay.
Your bank will then debit your account with the cedi equivalent of whatever forex amount you are debiting.
Sure.
Yes. So, to be very clear, international trade has nothing to do with these cash withdrawals and anything. It is a way, and I must admit that we have not done well with ourselves when it comes to cedi. I mean, the what identifies a country is its name, its flag, and its currency. See, the cedi is
culture.
Okay. Yes. I mean, there are many
other things.
Many other things. The cedi is who we are. The cedi represents what we are. The cedi represents our history. The cedi represents where we are even going. So the cedi as a currency itself is more than what is called a medium of exchange. It embodies.
Look, but others have abandoned their currency altogether. Money plays four main functions: as a medium of exchange, a store of value, a unit of account, a standard for deferred. So the question is whether the cedi has performed all these four functions
for us.
Maybe for medium exchange to some extent, a store of value.
No.
So. Let's look at okay, you finish.
So you actually agreeing with me that over the period, we as a people, and right from the 60s to now when the cedi was introduced, we as the people have not done well or done good by ourselves in the management.
Government have not the people.
Okay. With the management of the cedi.
Yes.
So you see, it looks a bit off that a currency which has always known depreciation is now appreciating. It's like a cold turkey. We are not used to the appreciation of our currency. So when we see that our currency is appreciating, it's like something, an anathema. What is happening?
It's the pace.
So you see, the strengthening of the cedi is not artificial.
The current one?
The current one. It's not artificial. It has to do with real sector interventions that was made by the government.
Interventions are artificial.
No, interventions are policies which are done to drive a result.
Okay.
So I mentioned, we've spoken, I won't belate the gold board intervention. Yes. I won't belate the fiscal consolidation. But these are real sector interventions. And I must tell you, for the first time in our history, through the operations of the activities of the gold board, we have received or we generated more money from artisanal small-scale mining than from big-scale, large-scale mines. What it means is that
Galamsey is driving the
what it means is that market forces see the forest generating capacity of this economy, and then those demand and supply play in, and which determines the value of the cedi. So the BOG the BOG is very clear. What the BOG directive is saying is that he didn't say that don't transfer. He says that you have no business going to withdraw cash from your dollar.
It gives a leeway that unless such transactions are fully supported by equivalent foreign currency cash deposits lodged by the same institution.
Yes,
what does that mean?
Mr. Benzo recently came from the US. When he was coming, he had $100 change.
Okay.
When he went to the bank, he went to deposit his $100. When he's going for his $100, the bank cannot say that I will give you $100.
Okay, that's what it means.
That's what it means. That if you went,
this large body corporate, if they have dollars, they can withdraw. Not just individual.
No. It's talking about generally. Okay, it's talking about he used them as an example. He says generally, if you went, you had your dollar, somebody came, visited your uncle, or somebody came from the UK and gave you £1, and then you went to deposit it in the bank, you are free to go and take your dollar or your pound. Okay, but not when
you don't have anything.
You don't have anything there, or you sort of even didn't deposit it in cash, and then you go that you want $1 million, $2 million.
But why were people withdrawing such huge amounts in Forex? Why were people doing that?
I don't want us to. There's a lot going on. I don't want to go into that. That is why we are saying that ab initio,
Yes.
it was illegal.
Okay.
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 It is illegal. It is not backed by any economics.
Were they not doing that for a purpose? Was there no reason for those huge withdrawals, for which reason the Bank of Ghana has had to step in?
Yes, the Honorable also does something for a purpose, right? So we if we want to go about purposes and those things, the fact of the matter is that is wrong. You can't do it. Stop it.
No, I asked that just for people to appreciate why maybe the BOG directive is necessary. That's why I asked that question.
So whatever purpose for which, I'm just saying that whatever purpose for which you are doing something, doesn't matter if the thing is illegal or not you are not supposed to do it ab initio. So whatever purpose you want to, you have to doing something, it doesn't mean that the thing is what you have to do.
Very well.
Yes.
Thank you, Frederick. Richard, I don't know where you stand on this after the explanation you've heard from Frederick.
Perceive it. I think Prof. Bokpin's question or statement about managing the currency is not an end in itself. It means to an end.
Yes.
And so on that score, I think he's answered the question. I wanted to ask him a question, but he's answered the question by indicating that what is being done is too aggressive. I was going to ask you that, so in lieu of that understanding, do you think what is being done is sustainable? But you have answered that question on one hand. You say that it's too aggressive, which means that it's not sustainable.
Yeah.
No. You understand?
No.
It's not sustainable.
No.
You can disagree. You can disagree.
No, that's his deduction.
The prof is here. You cannot speak for him.
Are you his spokesperson?
No, he's here.
Are you his spokesperson?
We are
arguing.
No, but Richard, agree that that's your inference from what he said.
From what he said.
Okay,
But he didn't say that.
Okay, so we can do it. Right?
Sure.
So excessive intervention in the market, which you agree is not sustainable.
Yes.
In my view, my inference, do you think what the Bank of Ghana is doing is sustainable? Because your spokesperson wants you to answer.
Oh no, I don't have.
But you get the point.
I've made this point several times.
Okay, good. So I proceed, right? No, he agreed. Let him.
So I've maintained that is the way the government approach to managing the economy. We agree with them from the fiscal side and then the complementaries from monetary side. We've seen the strengthening of the currency, and I maintain that the pace has been too aggressive.
Okay.
And it will have implications for the economy, clearly. And some of the reactions we are seeing in the market, for which reason Bank of Ghana is coming with this directive and all of that, it's just that the market is responding to all of these things, and the central bank is looking at how do we manage all of this, okay? So when I say that this directive and all of that, nobody is saying that it's not good and all of that, but ultimately, would this solve the fundamental issue? I hope you understand that, for which people are reacting. This way, you've seen remittances and the rest of them. We've seen import, we've seen government revenue from the port also coming down and all of that. So those are the concerns.
Right.
And when it comes to the city, we are all concerned about the stability, the sustainability and all of that. And let me add this, maybe I may get a chance. The IMF program is ending technically December 2025.
Okay.
And all of that. So if you are looking at the outlook and all of that, people are concerned. Not only that, people who want to withdraw dollars from the counter, so to speak, but even for businesses that need to make payment, transfer out of this country for import and all of that in anticipation of Christmas and all of that. There are real concerns that I believe that we have to look at, and I'm sure my good friend here agrees and all of that. So those are the things that...
But Prof, I'll come to Richard. As part of the sustainability argument, wouldn't it rather be a good call? Because the last time I went to South Africa, I couldn't buy in dollars. But I went to the mall and I had to go back to my hotel, pick my passport before I could exchange my dollars into rand before buying anything. Shouldn't we be getting there in Ghana?
Who has stopped us?
So these are the steps.
No.
These are regulations.
No, these are the steps.
Look,
These are the steps.
I agree with you.
It's a regulation.
We cannot do everything at a go.
So there's a role regulation can play.
Okay.
Regulation cannot substitute for real things that we have to do on the ground. Yeah. Look, if we talk, the economy's supply capacity is severely constrained. What are we producing in this country? What are we producing? When we talk about entrepreneurs in Ghana today, is to identify something outside and then what? Import it. And the rest of them. So that's why we are saying that to some extent, we've seen the role of fiscal discipline, expenditure cut, and I've commended government for that. I've commended the Bank of Ghana also from that. But where you see where the cedi is right now, I hope you understand that the aggressive trend from the beginning of the year to where it is it optimal?
Optimal.
In terms of promoting the economy that we want. Again, if you are looking at export, you are looking at maybe import dynamics and all of that, and whether real cash flow allocations have actually gone to the real sector of the economy. Here you are talking about agriculture, you are talking about maybe industry, you are talking about the rest of them. And I think that until there's substantial cash flow allocation, budgetary allocation, and we are beginning to see the transformation coming from the real sector and the rest of them, then we are going to have problems and all of that. And I'm sure that's also playing the role.
So Richard, please.
So the short answer from Prof is that it's not sustainable. Really, that's the point.
Essentially.
Yes, essentially. You see, and also the point was made, I don't know if by Mr. Kofi Bentel or Prof again, about if people form the idea that the price of the cedi out there is not real, it will undermine confidence in the market. That the demand and supply elements are not regulating the price on the market. That's one reason it is not sustainable. Because in that way, people would go out and still go and get the dollars outside of the banking system. That's how you lose control of it, and that's how the rate spikes. Obi, I am just surprised how this government wants us to believe that by this excessive intervention in the market, they will sustain the cedi. We all know the way to sustain any currency is through maintaining your trade balances. So where that you are not having deficits, or you are moving from deficit to surpluses. And that way you are strengthening your currency. So then you are looking at market principle that your demand and supply is meeting at a certain point. So people who want dollars can find it, people who want cedi can find it. And in that case, Obi, you are creating employment, which then makes the whole system sustainable. But what we have now is not sustainable. And one way I will demonstrate for my brother is this. You see, this whole thing that he was talking about offshore dollar, okay? That people can't find it. I know people who early on were trying to transfer and pay for their school fees. They were not getting the dollars. They go to the bank, they say this, they say that, they prolong the process and drag it. They were not able to pay for it.
The Guta raised that.
Exactly, Obi. So the point is that what is being done is artificial. And the artificial nature of it is such that you can see it. And that's why the market is reacting. And the Bank of Ghana is dumping more regulation on them. I agree with regulation that seals the loopholes in terms of feeding the black market trade. If you take away the black market trade, then you can then have a handle on how you manage your currency. So that part we agree, and every government has tried to do that. But the bit where they are doing and actually entering the market in the way that they are doing, I beg you, it is going to just disrupt the market and undermine confidence in our economy. You probably make the point that you are not managing the economy for yourself alone. There are stakeholders engaged in this economy with us. So foreign direct investment and people who want to come and invest in our economy. Obi, what do you think they are thinking right now to say that they are going to be regulated in the way that there are monies that are there in our currency that they want in another currency? Perhaps their own domestic currency. You can't get it.
You cannot withdraw it. You can transfer.
Obi, I made a point to you that people are trying to transfer 5,000 to pay school fees. They can't find it. So what they are saying effectively is that you can't take your money if it becomes cedi. You must use our cedi. And so if I want to invest in Ghana, is that an attractive destination? And mind you, in 2019, Ghana surpassed Nigeria in foreign direct investment. So what you're trying to tell us technically is that you are closing that window, which is the reason why the IMF and the World Bank are beginning to enter into this conversation. Because what you're doing is artificial. You are deceiving us. You know, when we were little, we used to have this cardboard and we'll cut toys and then we'll put lights there. And we invite the kids in the neighborhood and we begin to point it and say, this person is beating and all that. That's what they are doing. In the 21st century, with all the AI capacity we have, what you are doing is this baby photo thing that you are doing to us. And it's not right, Obi. It is not going to help anybody. And that's why you have seen that the excitement with which this government came to office, the goodwill they had, they have not been able to show anything. All it is they are doing is to send my good brother to argue in fine English what it is they are trying to do. What they have done is what we are asking. And everything they have done has been cosmetic and artificial at best. This currency matter should be a matter of the economy generating that strength. The strength of the cedi now, it is not actual. It is fake. So that you cannot see
what we are seeing now
is fake because there is no production that is backing it. Where do you get this from? Where did it come from? Let's look at our export numbers. What does it look like? Maybe you can tell us. Is it commensurate? Does it reflect? No, you have the time.
I'll give you time.
But I'm just saying that your trade position, okay, your ability to allow the market to set its own price, I think that's what it is that we're expecting. The manipulation that they are doing right now, Obi, does not give any confidence to anybody.
But they've told you in the first 5-6 months, gold alone has brought in some over $5 billion US.
Obi, so it's as if they discovered gold when they came to office. Suddenly they discovered gold, that gold was not in this country before. So what happens if the price of gold drops? And in fact, this whole thing they are talking about, my good friend Samir Jeff is doing some good work over there. But the point I want to ask is that this whole galamsey thing that is going, they're buying from small-scale miners. The increased exports they are having, and who are the ones selling the gold to them? Do we accidentally have illegal miners, galamseyers also filtering through?
They say small-scale.
But I'm just saying that there's galamseyers going on. And then the Gold Board has done an initiative where they themselves are policing smugglers. Okay? So people are not smuggling. You understand?
Yes.
People are not smuggling.
Yes.
But the people are galamseying. So those galamseyers, who are they selling their gold to? If we are to assume that Sami and his effort at Gold Board is ensuring that smuggling of gold is curtailed, then the galamsey that we are seeing, to the extent that their national organizer is issuing order to the president to say that he should decommission all the task force. Yeah. Now, if that is the case, we agree from that there is galamsey going on. So those galamsey, who are they selling their gold to? That's a question we need to explore. And so what they are telling us about gold has gone up and all of that is gold. How many jobs are they creating there in that sector? And how is that affecting the larger economy in terms of driving demand and supply in the economy? So what they have done is indeed formatting, which in another way they are calling resetting. They are resetting all of us to think what reality we know is not the reality we are having.
Essentially, they are
gaslighting all of us. And I think that my brother can do himself a favor because he's a young man, and all of these things are beginning to unfold. And we are going to see the full length of the NDC government and their resetting.
Very well. This one says, and Frederick, I'll come to you. I work for Treasury at my bank. The truth is just one. IMF has cracked the whip. BOG cannot keep on burning the reserves in pursuit of a stable exchange rate. So simply put, no more huge FX intervention from them till at least the IMF program is over. The BOG, before crafting this directive, came around interviewing bank treasurers, seeking to know our key dollar withdrawals. Some of the treasurers told them off. Heavy-handed directives at the moment will inure to the benefit of the black market, and that would erode all the gains. So, yes, Frederick, finally, a minute or two, and then we'll go for our
Sure.
next
We are told that we are burning through our reserves. We are availing. But you see, the figures don't bear that claim out. Within 6 months, this government has added over $2 billion to our reserves. Currently, our reserves stand, as at the end of June 2025, 11.12 billion, equivalent to 4.
From the 8 billion you inherited.
Equivalent to 4.8 months of import cover. So the figures do not suggest that we are killing ourselves to, to keep the cedi where it is. Now, we are also saying that it is what? It is artificial, it is not born out of economics. Our trade surplus has increased to 5.57 billion. And you see, to compare that, last year, as at the end of June 2025, June 2024, it was 1.37. So the forex generating capacity of the economy has improved massively. The trade balance alone has increased by over 300%. So the cedi stability we are seeing is actually born out of real sector development, as the figures are telling us. There's current account surplus, which takes into account all these inflows and outflows, including everything. Of course, we won't go into the academics. It's now 3.44 billion as at the end of June 2025. In the same year, it was less than $1 billion, 937. It has more than tripled. So what we are saying is that the forex generating capacity of the economy and the supply of dollar in the economy has improved, and it is as a result of real sector interventions. This cedi stability we are seeing, it is, yes, this is gold. Now, gold is a real sector. It's a real sector activity.
You want us to go there?
Please. This cedi stability we are seeing, it is not artificial. It is born out of interventions which have resulted in this economy generating more forex. That is why we are seeing the stability. We are not burning through our reserves. It is not artificial. It is as a result of how we have managed the finances of this country.
Will real sector not be manufacturing?
Yes. No, real sector, when we say real sector is the micro. No, it's production, micro level. Mining is not production.
Hold on, look. So
manufacturing is not production.
I agree with you, and I'm happy.
Yes. So the real sector of an economy does not only mean manufacturing.
There's a nuance.
Real sector means
there's a nuance.
We decompose that into three: agriculture, industry, service.
Yes.
That's what we call the real sector.
That's
And all those three we are seeing improvement.
We are seeing it. Fishing. The magic we are doing in the fishing industry. You should see the numbers.
My brother, look.
So you see, we have data to back to some
To back
extent.
the fishing point.
No, the fishing and real sector in general.
Yes.
Okay.
But
I am happy.
A minute each. Yeah.
I am happy with the progress. And by the way, if all that the Bank of Ghana is saying is that don't withdraw dollars across the counter in Ghana, I totally agree with you.
No disagreement.
I am also happy that you say we are generating, that dollar, volume in Ghana. The problem is where you spend it and say real sector and leave it there. There are nuances to the real sector, I beg you. We know for a fact, I put up that thing earlier in the year, that gold is what is driving the economy. Yes, gold is a form of production. But if you go down even into gold, galamsey is what is driving that.
Wait, the galamsey
I beg you, let me make my point.
Okay.
We like the output, but there's a cost to everything. And what we are saying is, even if you take the currency, look, what an economy needs is not a low currency, it's a stable currency. So it's not about whether it's high or low, it's about stability.
Stability at what level?
Hold on, I'm coming there. There was a Kenyan example. Prof, if you had time, we'll explain it. They held it at a point and they've kept it stable. When you draw it down too much, then you have to support it. Yeah. What we are simply saying is that management requires that you create stability instead of erratic shifts.
But the president has said the agreement between him and managers of the economy is to keep it within 10 and 12.
We are making a point. The point is where you have to keep something.
Okay.
The economy has a way of sustaining itself using the forces of.
You don't have to keep it.
You don't have to be aggressive about that. And it's important to us because much as I like what you are talking about, I worry about when it crashes and then we have to revert. So please, you manage it. We like this thing. But this problem of running an economy on galamsey, and two, having to sustain a currency at a point where you are being too aggressive, manage it a bit better.
That's fine.
Prof,
you made a point that the three sectors we've seen some growth.
Yes, industry first quarter growth, even though industry went down, driven by oil and gas and all of that, we've seen a great picked up and all of that. But then, if we are talking about transformation, this is not transformation. And this is not the kind of improvement that would actually anchor the stability of the currency in the long term. Yeah. Those are the things. And then bear in mind, this is the issue. So when you see when we talk about aggressive strengthening, that's different from stability. So we are looking at the rate at which the cedi has appreciated within this short time. That probably is causing dislocations in the economy. Okay. And so when you see that sharp appreciation to where it is now, and the market feels that this is not where it's supposed to be, then it will not crowd in FX. Probably if you talk to some of Ghanaians who live abroad, they will think that it's so difficult to earn dollar. Okay. But when they bring it here and your price is so low, they will hold back.
Very well.
And all of that. So we are looking at this without crowding FX. We've seen the surplus and all of that. But if we are to meet all our demands, based on requests and all of that, these reserves, there will be pressure on it. And that's why I'm saying that I see where Bank of Ghana is coming strongly from regulation. That yes, we've got the reserves and all of that, but if we have to entertain all these withdrawals and all these demands, these reserves cannot last us for long. Those are the things that we need to look at.
We'll go for another break, but before that, two messages quickly. A senior lawyer watching us comes with this, and he says, Obi, it looks like the Bank of Ghana's latest directive about corporate only getting foreign currencies, if matched by their deposit, is targeted at BDCs. If not, then we know for sure that it will hurt companies that sell to the local market in cedis, but either get their product abroad or repatriate their proceeds, i.e. dividend, etc. overseas. Example, BDCs, telcos, pharmacies, spare parts dealers, etc. Of course, exporters should not be hurt by this, but importers for the local market, what impact would it have on BDCs and telcos like MTN? Unfortunately, evidence this week shows that the banks are misinterpreting it so much so that NGOs, embassies are all being affected. It requires greater clarity and very fast. And he says, I just had some clients complaining to me yesterday. Okay, that's really interesting. My former colleague here at the Multimedia Group, Dr. Opoku Gapo, listening to us, says, Obi, very exciting conversations there. I'm happy to see the concerns of cocoa farmers being discussed on the biggest radio TV talk show in Ghana. The reality is that even if cocoa farmers were paid 100% of the FOB price, it still wouldn't be enough to make them wealthy or move the majority into the middle class in the 21st century. The core issue is this, that selling raw cocoa is simply not profitable enough. Research shows that cocoa farmers receive just 5 to 8% of the value of a chocolate bar, while manufacturers, processors, and retailers take 95 to 92%. One study even found that on the average, cocoa farmers in Ghana earn less than 5% of what a bar of chocolate sells for in the UK. We need to promote value addition and local processing so farmers can earn a greater share of the final product's value. That way, government can tax the cocoa processing companies and reinvest in cocoa communities. Let's also encourage farmer cooperatives to own and run cocoa processing businesses. That's how we move beyond just selling raw produce and ensure better incomes and long-term sustainability for our farmers. We cannot create riches from simply selling and exporting raw cocoa beans. Yeah, the same like gold. That's Dr. Opoku Gapo.
This is where
after this short break, we'll come back and deal with the Ghana Tertiary Education Commission and fake doctorate and professorship after this short break. Stay with us.